week here, at least for the U.S. sessions. Had Monday off, so only a 4-day trading week. But ultimately, wrapping things up, seeing how the market's gonna end the week. So what we're gonna do is I'm gonna pop over. We're just like the normal updates. We're gonna go through, talk about what's happening in the futures market, talk about Forex, crypto, and then I'm gonna let you get out of here. I'm gonna really do my best to try to keep these things short without going into too much detail. I do have 2 things coming out today. I am finishing up lesson 5. So in the members area, in the Forex section, I'll be putting in lesson 5, which is going to take the first 4 lessons, put them together. We're going to talk about some other considerations of what we need to be watching when we're trading. And this really, while it's Forex specific, it does apply to all markets. The same principles overall. I mean, Forex operates differently from the futures market, from the options market, from the crypto market. Crypto is a little combination of both. But anyway, some of the other fundamental things that we have to look at apply across the board, across all markets. So we're going to talk about those other considerations when we're trading beyond just what's happening on a chart or beyond what's just happening as far as lines crossing on a currency strength meter. We'll talk about the other considerations that we need to be aware of so that we can make good trading decisions that are in our best interest. So we're going to get to that lesson today. Also, one that I've been wanting to put out that I'm going to do after this video is simply a lesson talking about breakouts versus bounce style trades, and I'm going to talk about that here in a second. About what I'm looking at. We talk about very often here when we're talking about the futures market. I'll talk about buying, like for instance the S&P. We're long, right? S&P's been moving to the long side. It's been moving up. We're in an upward trend. So I keep saying buy the pullbacks. That means you have to buy a bounce. So oftentimes there's the question of, do I buy a bounce or do I trade a breakout? What are the benefits? What are the drawbacks? What is one easier than the other? And so I have I just want to do a quick lesson specific to that. So after we wrap up this morning update video, give it a couple minutes, grab some coffee, and then I'll come back and I'll do that video talking about bounces versus breakouts and how you can use them, why you could use them, why one might be better than the other for you. So we'll move from there. All right, so let's go into the markets. We'll have a quick look, starting with the futures market. Over here yesterday, we talked about the fact that we're in an upward trend, although yesterday and even the prior day we had been pulling back. So when we came into the markets yesterday morning, we were looking at, if I can move this over, this is what we were seeing when we weren't even here yet. I don't know if I can get it without that little piece. Nah, can't quite get it there. Anyway, what we were seeing was that we were moving down. So when we came into the markets yesterday, we were pushing lower, been pushing lower off of a new all-time high that occurred on Wednesday, right? So we've been pushing lower. I mentioned, from this one, look to buy the bounce. We're still in an upward trend, and we're in an upward trend until that trend is actually broken and it starts moving down. But until that point, we're still in an upward trend. And a lot of people don't like that. Like, Brian, we're too close. We're at the top. And again, I just have to reiterate, talking heads out there have been saying we're at the top for 2 years now, 3 years maybe. Ever since we broke 2000, we're at the top. All right, so where's the actual top? No one knows. No one, and I can't reiterate this enough, no one, not anybody on NBC, not anybody selling a trading course, not anybody on YouTube, not anybody on Facebook, on Instagram, on TikTok, anywhere, nobody knows where the market's going to go next. Nobody. I can't stress it enough. All you can do is have a trading plan that allows you to limit your loss when you take a loss, because you're going to take a loss, and have a trading plan that allows you to take profit at least 1-to-1 but better is 1.5 to 2 or more to 1 of your loss. And obviously there's some other considerations. You need to have a market that's moving. You need to trade during times that you have the best opportunity for volatility, so on and so forth. But ultimately, the end of the day, having a good money management program trumps everything else, and the mindset to actually stick with it, because no one knows where the market's going to go. One of the easiest, I shouldn't say easiest because it's not really easy, it comes back to everything comes back to mindset. Probably one of the safer ways of trading is to simply trade with the trend. Trade with the trend. Look at a trend on like a 4-hour, and that tells you what the sentiment of the market is, how the market's moving, and then trade with that trend. Easier said than done, I know that, but at the end of the day, I think of it kind of like Newton's first law, right? An object in motion tends to stay in motion. That's like the market. The market's an object in motion. It's a motion going either up, down, or sideways, but it's in motion, and it's not going to change that motion until some outside factor comes in and has enough of an impact to cause it to change direction. And that's really what it comes down to. We don't know when that's going to happen. It'll happen. We don't know when it's going to happen or why it's going to happen or what that actual driver is, or we can't predict that. So we have to just simply have processes that allow us to have some level of consistency. So anyway, I went off on a tangent there. So again, look at opportunities to trade with that trend. As a matter of fact, I mentioned yesterday I was looking at getting my presentation sorted out for the Wealth 365 event. I did put on a trade, but it never triggered for me. I'll pull this up over here if I can make that bigger. I was looking for it to pull back to 3,300, which you can see this. It never got there. It never got to 3,300. It came down to, 3,302, I think it was. 3301.25. It came down almost there, and then pushed back up and went back long again. I'm not showing you that to say that I'm any kind of prognosticator, because I'm not. I don't know where the market's going to go. But I look at key levels, 3,300, big psychological level. If it pulled back to that, it'd be a good spot for it to at least bounce off of for the couple of points. Does it mean it absolutely will? No, it could hit 3,300, just blast right through it and not stop until it gets to 3,375. No one knows, right? That's what I just really want to hammer home. The sooner we can accept the fact that we can't predict what's happening next, and we just simply have to have good money management, and obviously there's other considerations to give ourselves an edge. But the sooner we can accept that we can't predict it, the more at peace we become with trading. Anyway, so let's talk about, I went, again, down a rabbit hole, so much for me keeping it short. So let's just talk about the levels, and then we'll come back after I get my coffee, and we'll talk about some other things that we can look at in the market itself. What am I watching today here on the ES? Again, we're in an upward trend. Looking at a 4-hour chart, we're in an upward trend. It's definitely moving up. I don't think there's any way to refute the fact that we're in an upward trend. So, with that said, what I would like to look at is pullback. So if it pulls back, I'd like to buy off of that pullback. Obviously, there's an argument for 33.30. It's been a well-respected level. If we look here, especially on a 30-minute chart, and chunk it down a little bit, if we look right across here, 33.30 has been a pretty darn well-respected level. On a 4-hour, I'd like to see it come back closer to 33.25, 33.27 as an area to buy off of. But this remains to be seen. We'll wait and see what happens once the actual U.S. session gets fully underway here. We have live trading. Right now we're still in off hours trading. So once we get to that here in about an hour, probably about 40 minutes, we'll see what happens. When we come down to 33. If it pulls back here, maybe it won't. Maybe I'll never see it again. But I think it'll pull back a little bit. If it even gets to 33.30, that'd be a level I'd look to buy off of. If it pushes through that, I'm going to keep my stops down here below 33.25 and see what happens. I'd rather, though, I'm going to wait until the candle opens and see what it does. If it pushes beyond that, I'm going to wait. If it opens below 33.30, I'm going to wait. And I'd like to buy down here at 33.25. That's my personal spot. that I'm watching for, 33.25. If I can't get there, I'm active in the market this morning, so I'm going to watch what happens around 33.30 and make decisions as well. But I'd like to see it pull back to 33.25 and then buy off of that level. Crude, again, we're in a downward trend. We talked about last couple of days looking to sell off of pullbacks. Yesterday, never really had a chance. We did have some news yesterday, and we saw crude gain a little bit on news, but it continues to push weaker. Crude's an interesting one. It's a little more costly to trade. It has pretty can have a pretty wide range as far as movement. And remember, your $10 a tick, but there's 100 ticks in a point, so it can certainly move pretty darn rapidly and get expensive fast. For crude, we are in a downward trend, but we do seem to be hitting a bit of a bottom that hasn't been tested since October, November. So there's a lot of thought. Hey, are we at a bottom? Do we look to do some counter trend stuff? Yeah, potentially, and that's fine. If we're bouncing off of 55 right here, is 55 an interesting spot to maybe go counter trend from? I looked at that from 55.50 yesterday, and it ended up not doing too much around it. We, moved through 55.50 like butter, and then came down to 55, and that's when we had our news, and it bounced back up and hung right around 55.50, 55.60 for the day. So we're back down here right now prior to everything getting fully underway, sitting pretty close to that 55 area. 55, again, if you look at counter trend stuff, good opportunity, I think, to look to buy off of. However, you remember that's counter trend trading. So, coming back to that, I don't want to say safer, it's not safer. There's nothing that's say you make it as safe or as risky as you want by how you control your risk and how you use lot sizing and margin and whatnot. But the trade with the trend would be to wait until it pulled back to 57.5, which is over here roughly. Look at 57.5 for that pullback and then sell off of that would be the trade that's with the trend. That requires patience. Another key when it comes to trading of any instrument, patience, right? Gold, we're still hanging in this channel. We've been sitting in this channel between 1550 and 1560 for quite a while now. So, continuing to stay in that channel. Again, looking at gold, it's in a long position. So, looking to buy pullbacks on that. So, looking to buy 1550, 1555 even. Great areas to seem to play off of. So that's what I'm watching right now here in E-minis, here in crude, here in gold. Again, it all comes down to finding your levels that you're willing to trade off of when it comes to the futures market, and then being patient, waiting for a price to come there, and then making your trading decisions around it. From a Forex perspective, I'm kind of getting low on what my allotted time would be, but from a Forex perspective, again, Forex trades differently than futures. It's very different. With foreign exchange, there are still those considerations. We've got to find a currency pairing that has some level of volatility, needs to have some room to move. So we want to look at what the average daily range is and how much it's already moved compared to that range. Again, doesn't mean that it can't move any further if it's already maxed out the range, but what's the likelihood of it? So, I want to give considerations to that. And ultimately, we're looking at how each individual currency is performing in order to find what currency pair to trade. So we're not just looking at a, here in the futures market, we can look pretty specifically at three specific instruments. In the foreign exchange market, we can't just look at one instrument or two instruments or three instruments and go, well, I'm only going to trade, I'm just throwing pairs out, by the way. I'm only going to trade the Euro USD, the Pound USD, and the, Pound CAD. I'm only going to trade those things. In doing that, you really limit your view on the marketplace. So from a futures perspective, from a Forex perspective, we want to look at what is happening with each individual currency and then make decisions around it. So that's what I'm watching here. I've got this meter up that's allowing me to see where strength and weakness is, which currencies are trending to strength, which currencies are trending to weakness, and then that gives me an opportunity to look at what that specific pair is doing, how volatile it is during this time of day, what range of movement it typically has, what the cost is of getting into that trade, so on and so forth. It allows me to be a more educated trader in the Forex market. It is a big departure from what we're looking at in futures, and this is an important consideration too for traders. Find one, become proficient in that, and then find something else that you'd like to trade that you can do in conjunction. Don't try to learn everything at once. I talk about futures and I talk about Forex and I talk about crypto, but I've also been living in these markets since 2008. If you're just starting out, or even if you've been doing it for a while but you're not successful in any one spot, pick one, learn about it, become consistent, become good at generating consistent results from that, and then add something down the road, right? A good spot to start, because the barrier of entry is low, is the Forex market or the crypto market. But either of those, the barrier of entry is pretty low. So a good spot to start is there. Hone your skills and then move on to something else, right? So anyway, that's what we're looking at in futures. I will be doing more futures on Forex. I will be doing more on Forex later today. I'm going to have lesson 5 out to you and in the members area, so do watch for that. I also have a limited number of tools that I'll be putting into the members area today. I do have 2 other indicators that are being coded still that won't be quite ready yet, but most of this is ready for you to put out there and have in MT4. All right. In the crypto market space, real quickly, we've been pulling back both Ethereum and Bitcoin, which are the 2 main ones that we're watching. Both have been pulling back here. Excuse me. We're still on an upward trend. The overall trend hasn't changed yet, but we certainly have broken through some key levels, and we seem to be seeing some resistance around them now. So both of these, kind of playing it safe. We're going to wait until we get some confirmation here, but we do seem to be starting to turn the corner, and we may be up for a little larger pullback on both Ethereum and Bitcoin. We could see Bitcoin potentially pulling back to this 8,000 area, 8,100 or 8,000. We could see Ethereum over the next day or two pulling back down to this 150 area. So let's be patient. It all really comes down to where we are right now. Bitcoin's hanging around this 8,400 level, which was a previous high. It had kind of broken through that. It hadn't really retested it in a while after it broke it. So it's come back now, and we're retesting this 8,400 area. So depending on how it closes and how things go, we don't want to try to anticipate too much of what's going to happen here. We want to let it close. If it can close above this on a longer term, then potentially we could still look to buy those bounces. Ethereum, has broken below that 160, 162 level, 162 and a half, and it seems to be using this as resistance now. Again, same thing. If it can break above it, then potentially we can look to continue back long here off of that 162 and a half or 162. But until we get to there, I'd say just kind of step back, be safe, look to maybe find these lower levels. If it does continue to push down, look to reload back here at this 150 on Ethereum, or at that 180, that 81 or 8,000 level over here on Bitcoin. I've been talking the last few weeks now about Crystal, which is my buddy's project. It's again not open to the public. It's not going to be called that when it actually comes out. Just beta testing. Still seeing good results. The market's been, as we see over here, we've seen a lot of pullback. Pretty large percentage decrease off of these highs. This Crystal token still doing what it should be doing. It's automated trading with some combination of some manual management. It's pulled back as well, but even during the pullback, it's not losing. It looks like I've been keeping pretty good track of it. I check it about once a day. I don't just sit here and stare at it, obviously. But it looks like it's when it does draw down, it's capping its losses pretty quickly and sticking to a 2% or less on the drawdown. So at this point for the month, still up over 10%, which if it can do that consistently, which it has since the summertime, that'll be great. Obviously, I've just literally we're a month and a week into, I guess about a month and a half. Either here or there. A little over a month of being in, using live money in this as a beta test. But I'm very pleased with where it's been going. I started the account with right around $2,000, and that was in December 12th, I believe, was the first date that December, it says it right here, December 11th, was when I went in. So, very pleased with the performance. January 2nd was when I started taking screenshots. It started at 21.12, and here we are today. Even with the pullbacks, which we had broken 2,400 a few days back. But hey, I look more at percentages, and I look for, the same thing we talk about in other markets. Is it winning more than it loses? Not winning more often necessarily, but when it loses, does it cap the loss at a low level? And when it wins, does it take a larger win than it does the loss? And it does. So anyway, that's it for now. Again, over 20 minutes. Really need to figure out how to not get on these tangents sometimes when I start talking. I'll be back after my coffee. We're going to talk about what's better, breakouts or bounces, how do we use them, so on and so forth. And then after that, we'll finish up lesson 5 for the Forex training and get the tools online. All right, so there it is. Have a